A very warm welcome to everyone today for Taxman's webinar on Annual Information Statement, Elevating Taxpayer Service and Aiding Tax Administrators. This is with Deloitte as the knowledge partner. My name is Rohinton Sidhwa and I lead the global business tax practice of Deloitte India. I have the pleasure of hosting today's webinar. Joining me today as speakers are Divya Baweja and Amit Bablani. Divya is a partner with Deloitte India and leads our global employer services practice, and Amit is a subject matter expert. Before we discuss the agenda, I'd like to highlight some procedural aspects regarding today's webinar. First of all users are on a listen only mode. Second, if you have any content related questions, you can submit them at any time in the Q&A box at the bottom of your screen. We will address as many questions as possible during this presentation, and there will also be some polling questions during the webinar. I sincerely urge all participants to actively participate and share their views. Before we dive into the specifics of today's session, I want to mention that the Deloitte India Tax Policy Group has prepared a white paper titled Annual Information Statement, ushering in a new era of tax administration. This paper has been released earlier today, and a link to access this policy paper will be shared with all the participants. The policy paper provides a comprehensive analysis of the evolution of AIS and its role in increasing the tax base in India. There are some specific recommendations to enhance the efficiency and effectiveness of AIS, thereby improving the experience and outcome for both taxpayers and tax administrators. Towards this end, the paper also talks about some global best practices and ways in which India can integrate them into its AIS framework, as well as ways to tackle black money through AIS. With that, let's move into the agenda slide for today's discussion. By the way, through the release of this paper, we aim to initiate constructive discussions and welcome insights from diverse stakeholders. And we believe that the paper and the conversations today will serve as a valuable resource for policymakers, researchers, and practitioners alike. Turning today to the contents of today's webinar, here's a quick overview of the key topics that we will cover. Firstly, we will focus on an introduction and an overview of the current AIS system and the success that we have reaped from the existing system. We will then discuss key recommendations for improving AIS functionality and also bring in insights on global best practices which can be leveraged to improve the existing AIS capability. With that, let me hand it over to Divya to provide us with a background of AIS and how the system has evolved over a period of time.
Thank you, Rohinton. Thanks for the introduction. Good afternoon, everyone, and welcome to today's webinar on India's Annual Information Statement, a prime example of how technology is really revolutionizing the way we handle tax compliance. In the digital era where information flows rapidly, the tax department has been proactive in implementing various initiatives such as faceless assessments and appeals, e-filing of forms, and many more. One such transformation initiative by the tax department is the introduction of the annual information statement, which has had a profound impact on the tax administration and compliance landscape in India. It's not just a mere document, but it's a tool that really empowers individuals and entities to stay compliant with tax regulations while also fostering trust and accountability in the system. Now, before we delve further into the AIS, let's just understand the journey of how we have reached the current stage of AIS, a journey which started somewhere in 2019 to where we are. As you may be aware, for many years, Form 26AS has served as a consolidated tax statement offering a comprehensive overview of a taxpayer's transaction. It encompasses details like the TDS, the TCS, advanced tax, and self-assessment tax payments. In the year 2019, the tax department extended the usage of Form 26AS by introducing the facility of pre-filled tax return, based on the information already available in the Form 26 AS, which was primarily used as a document for reference by the taxpayers in the earlier years when they were filing their tax returns. AIS was initially introduced in the year 2020 by the Finance Act 2020. Unlike Form 26 AS, AIS extends its coverage to include a wider array of financial data. This encompasses information on interest, dividends, rental income, GST turnover, securities and mutual fund transactions, and many more. It also includes foreign remittance details as well as high transactions like real estate transactions, amongst many others. Now, as we move further, you will see the extension of Form 26 AS has been a part of India government endeavor to really bolster transparency and encourage voluntary tax compliance by taxpayers. By capturing a broader spectrum of financial activities, AIS assists both taxpayers and tax authorities in ensuring that all taxable events are really accurately reported in the system. So now Form 26 AS serves as a comprehensive record of tax-related information available to the taxpayers, whereas AIS helps taxpayers compile and report income for tax purposes and is often used for reporting of taxes and the tax return and compliances. The introduction of AIS aims to simplify the process of filing accurate tax returns while also introducing the likelihood of tax and financial irregularities. If I were to look at what are the key objectives of AIS, the key objectives would include providing taxpayers with diverse information related to the various streams of income, promote voluntary compliance by encouraging taxpayers to proactively fulfill their compliance obligations, facilitate seamless pre-filling of tax returns by integrating AIS data, and also it acts as a deterrent to non-compliance by ensuring that the significant financial statements or activities are recorded and correctly monitored. Moreover, taxpayers have option to report any discrepancies between AIS and their own financial records through the online feedback mechanism provided in the facility. Now, how do we access AIS? To access AIS, taxpayers must log into their e-filing account using their username and the password. Once logged in, they can navigate into the AIS portal to view their statement. And to enhance the accessibility, the tax department has also launched a free of cost mobile application, namely AIS for taxpayers, which provides a comprehensive view of AIS and enables responses through mobile devices. Hence, it's fair to say that AIS represents a significant advancement in the tax system. It offers a comprehensive view to taxpayers' financial activities and financial affairs, and thereby also encouraging greater compliance. Now, with this, let me invite Rohinton for the first polling question. Rohinton, over to you.
Thanks very much, Divya, for that explanation. So let's get into our first polling question, which should appear on your screen momentarily. The question is, what is your primary reason for reviewing your annual information statement? It's a single choice answer. Option A is tax data reconciliation. Next option is financial data reconciliation. Third option is voluntary compliance. And the fourth option is all of the above. And while our participants are voting on that question, and we wait for the poll results to come out, let me ask Amit as to what does the data relating to tax collections and compliance indicate in terms of the usefulness of the AIS?
Thanks, Rohinton, and good afternoon, participants. Well, Rohinton, the statistics clearly indicate an uptick in tax base, tax collections, and tax compliances over the years. And I think a major reason for this trend can be attributable to various initiatives of the government and the tax administrative body, which includes, introduction of AIS, e-filing 2.0, and multiple sources of information gathering.
Thanks, Amit. And as we can see from the results, most of our audience is utilizing the AIS facility to ensure that the data is available with them, both tax and financial data, and that it matches with the data available with the tax department. And this will help avoid some litigation also in the future. Amit, over to you to take on the next slide.
Sure. Before we discuss the apparent benefits of the AIS, maybe let's spend a couple of minutes analyzing the narrative conveyed by the statistics available. Uh, Firstly, I think it is heartening to observe the rise in India's tax to GDP ratio, which is a result of encouraging voluntary compliance through technology initiatives, including AIS, e-filing 2.0, and others. India's direct to GDP ratio for the year 22-23 has risen to 6.11%, which is a 15-year high. And if you look at the total tax to GDP, it stands at 11.7%. While we are still below OECD countries' average of 34%, I think enhanced use of technology can certainly leapfrog our progress towards achieving this outcome. The government has also focused on introduction of new data sources in statement of financial transactions, which is also known as SFT. And this SFT includes details of shares, mutual funds, dividends, interest, as well as information from GSTN. Now, all of this data is disclosed to the taxpayers in the AIS. And this move has been particularly impactful as it has led to a 12-fold increase in the reported information and also the addition of data for approximately about 3 crore individuals with the tax department. Similarly, if you look at it, the introduction of new TDS codes that has almost doubled over the past 8 years, resulting in a 2x increase in not just of reported transactions, but also in the number of unique deductees. Now, one may ask, what is the quantifiable result of these changes or initiatives? Over 16% more ITRs were filed till July 2023 as compared to the returns which were filed during assessment year 22-23. We also see that the number of non-filers has substantially declined and the filing of revised and updated tax returns has increased drastically. If you look at the collections of the income tax department, they have garnered about 4,600 crores in taxes till January this year from 56 lakh updated returns filed in the past 2 years. With this, Rohinton, would you like to talk about some specific insights from the Deloitte's AIS paper regarding, what could be the other key reasons for increase in the tax base?
So this particular paper, not only did we consult extensively with taxpayers, but we also spent quite a bit of time in discussions with tax administrators. And one finding that came from that was that if the taxpayer knows that the tax department is in fact in possession of details about his transactions, then there was a very high probability that the taxpayer would ensure compliance for the same. Now, this is the reason why there was a significant number of updated returns being filed. And based on this insight, the tax department has actually decided to increase the scope of disclosure in the AIS. So a large part of the data in AIS, which was already known to the tax department, was not automatically shown to taxpayers. And therefore, by actually pushing this data out, it's actually helped in not only a service to taxpayers, but also influencing taxpayers to report everything. Aside from this, the tax payer service wing of the CBDT did conduct several other areas of pushing compliance, and this include launching hubs in tier 2 and tier 3 cities, implementing some tax literature programs, engaging taxpayers through interactive videos, and introducing what we now know as the Samvad sessions. One of the very innovative initiatives was the launch of board games and 3D puzzles, comic books, basically targeted at the future taxpayers, so younger people who are actually coming into the taxpayer net. And in fact, the OECD has appreciated this initiative in their 2023 report titled as Tax Administration Comparative Information on OECD and Other Advanced and Emerging Economies. So again, something which has drawn attention globally. With that, let me kind of hand it back to Amit to talk further into the next slide.
Thanks, Rohinton, for these useful comments. Let's move to the next slide to talk about how the AIS has benefited both the taxpayers and the tax administration. Uh, I think introduction of AIS has indeed proved useful in numerous ways, and it has also revolutionized the process of tax compliance, making it kind of more straightforward, efficient, and transparent. Let's delve into some key benefits that AIS brings to the table specifically for the taxpayers. First, I think India's adoption of AIS and the use of third-party information reports has kind of been instrumental in promoting compliance and pre-filled tax returns. Pre-filled tax returns and AIS have significantly reduced the time spent on data collation, leading to a more seamless return filing process. And if you look at pre-filled tax returns, they're not really a new idea. Over 45 countries, including Germany, Japan, and the UK, have embraced the pre-filled tax returns. In fact, some countries have even gone ahead and used a concept called tax agency reconciliation, where the taxpayers can elect to have tax authorities auto-complete the data before the filers or the taxpayers approve the tax return. AIS also provides for a robust feedback mechanism that allows the taxpayer to object to any information if it has been misreported by the source. This ability to correct the misreported information at an early stage prevents the initiation of audit proceedings or avoid prolonged litigation from the tax department. Also, I think, again, voluntary compliance is bolstered when taxpayers find it easier to comply with the tax laws. And as Rohinton mentioned, when a taxpayer knows that a variety of its financial data is available with the tax department, it kind of acts as a deterrent towards non-compliance. Hence, we see an uptrend in filing of revised as well as updated returns. Last but not the least, the information collated through AIS and third-party sources has also helped in faster processing of tax returns, which has resulted in kind of quicker refunds for the taxpayers. Since we are talking about the benefits of AIS for taxpayers, I would also like to point out that an online survey on income tax digitalization in India was conducted by Deloitte last year in the month of May. And the primary research involved about 129 professionals across different industries, which included C-suite executives, directors, president from finance functions, and tax managers. Amongst other things, the survey revealed widespread praise of the move of introduction of AIS and e-filing 2.0 by almost all the industry participants. Other than AIS and e-filing 2.0, respondents also praised the improved user interface of IT portal, reduction of errors and expedition of processing of tax returns and as well as refunds. So these do reflect the success of the government's push for a technology-driven and convenient tax system. Not just for taxpayers, there are numerous benefits available for the tax department as well. The tax department now relies on the information gathered through AIS and from other law enforcement agencies to verify the accuracy of information that gets declared by a taxpayer in their tax returns, and also to detect non-filers. The seamless flow of information combined with the advanced technologies that the tax authorities have been using these days has aided the department in making informed decisions and conduct audits more judiciously. AIS has also been instrumental in expanding the tax base and also in increasing the tax revenue. By applying automated tools, algorithms, the department can now collate information more efficiently, leading to improved voluntary compliance and better detection of tax evasion cases. All in all, I think this process has resulted in a significant increase in tax collection for the department as well. Now, this takes us to our second poll question, which will just appear on your screen. Yeah, so the question is, how beneficial has AIS been for you in ensuring accurate disclosures in your tax returns, both from the perspective of a tax professional and as a taxpayer? And the options are A, very useful, B, somewhat useful, C, not useful at all, or D, that you've never even considered AIS while filing the tax returns. While we wait for the poll results, Rohinton, a question for you. In your experience, has AIS been more helpful for individual taxpayers as compared to the corporate taxpayers? what I'm trying to ask is that, do you think there is untapped potential for usability of AIS as far as corporate taxpayers are concerned?
Sure. In fact, Amit, our paper actually lays this out in a much more amount of detail. But a couple of aspects that I would like to talk from the paper is how it can really enhance the aspects for corporate taxpayers. First, for instance, the GST turnover that appears in the AIS, in most cases, the turnover just doesn't reconcile with the turnover as per financial statements. And that there's a simple answer. Inter-unit transfers of goods is turnover as per GST, but not as per financial statements. And given this, there is a difference. Now, I'm sure there could be a smarter use of technology which can consider all these differences. And similarly, adjustments that are typically made by the CPC under 143.1 can be moved to AIS, which will provide taxpayers with an option to provide feedback and also avoid unnecessary adjustments. With that, the poll results are out now, and the audience seems to share our view that AIS has been very useful to ensure correct compliances are made in the tax returns. With that, let me hand it over to Divya, who takes us through a very interesting part of our presentation, which is the specific recommendations to enhance the utility of AIS.
Thanks, Rohinton. Can we move to the next slide, please? So while we all realize and understand that the annual information statement offers many benefits, it also comes with certain challenges such as data accuracy, completeness of data, complexity in integrating data with different financial institutions and systems. Now, addressing these challenges requires significant collaboration between the financial institutions, the tax authorities, and other stakeholders so as to develop standardized processes, enhance data security measures, improve data accuracy, and also streamline regulatory compliance. Hence, continued innovation and collaboration is crucial for really sustaining the benefits highlighted earlier during our conversation. In this context, we would also like to outline some important recommendations for further enhancing the efficiency of AIS. Now, these recommendations can be broadly divided into two buckets. One is areas of improvement in AIS, which is what you see on the slide, and I'll talk about that in detail. And the other is introduction of additional data points in AIS, which will really facilitate the streamlining of compliances and processes that we talked about. So coming to the areas of improvement of AIS functionality, let's first talk about, say, information relating to capital gains. Now, it is observed that AIS lacks information regarding purchase date of shares or securities. Now, this gap creates additional work for taxpayers who really need to manually retrieve the data, even though most of the data could be available in the AIS. Further, the date of sale reported in AIS is usually the settlement date, which is 2 or 3 days after the date reported for tax for capital gains statement, which is different from the actual sale by the broker. Now, this discrepancy can cause issues in capital gains reporting in tax returns based on AIS data, as the settlement date could fall into a different financial year than the actual sale date. Now, including these informations accurately in AIS would really enable taxpayers to verify and reconcile their transactions more effectively on a transaction-by-transaction basis, simplifying the income reporting in the tax returns. Now, let's look at information relating to income from other sources. Now, in case of income from other sources, the segregation of refund and interest on income tax refund is required in AIS for really accurate disclosure in the tax returns. Also, it has been observed over the years that some bank accounts do not appear in AIS due to a variety of factors, such as non-compliance by banks. It could be oversight when filing SFT, or the possibility that associated accounts are not linked to PAN or Aadhaar. Such non-compliance leads to omission of interest income in tax returns and hence requires necessary action from the tax department. Next, it's noteworthy to note the rental amount which is reflected in the AIS is actually the exemption amount claimed by the tenant as an employee. which could really differ from the actual rent paid. Therefore, it is essential to reflect the actual rent paid in the landlord's AIS so as to prevent discrepancies between the AIS and the tax return. Further, it's been observed that tax payments are updated in AIS according to the date of payment. Now, to ensure appropriate information, tax payment should appropriately be reflected in the assessment year to which it relates to, instead of the date of payment of taxes. Now, besides the point we just discussed on completeness of information, measures are required also to be taken by the tax department in order to avoid filing of inaccurate particulars, also including incomplete information by third parties. Considering comprehensiveness of each pre-populated tax return depends also directly on the nature and the scope of information. Now, information submitted by third parties should not be used by the tax department unless the same is verified, after allowing the taxpayer an opportunity of being heard in terms of any data mismatch, as it may cause certain challenges as we go forward. One of the major issues being faced by taxpayers is that AIS functionality continues to be updated even after the taxpayer has filed the return for a particular year, which leads to unwarranted notices being issued by the tax department. Hence, all information should be made available in AIS before really the tax return filing happens, so as to ensure its accuracy. And this will also help in unnecessary notices being issued by the authorities. Further, AIS can also highlight discrepancies and point of litigation much earlier. Reconciliation should be sought even before the tax return is filed. Now, this will really address the tax disputes before they occur and prevent inaccurate reporting at the tax return stage. Now, let's move to the next slide. Now, this talks about what are the additional data points that should be there in the AIS. I've talked about some improvement areas. Now, let's see what are some of these data points that should be looked at. Now, many eligible contributions, such as investments under Section 80C, 80D, and donations under 80G, are linked to taxpayer span. Now, this information can be disclosed as a distinct category in AIS for ease of filing of the tax returns. Further, individual taxpayers are obligated to report their directorships and ownerships of unlisted shares held at any point in time in the tax return. Now, it is important to note that MCA has introduced rules for private companies, except small companies, of course, to dematerialize its existing securities by 30th September 2024. The tax department may consider implementing a reporting mechanism with the registrar of companies like SFT reporting to seamlessly link this data with the AIS. In addition to the above, any receipt aggregating to 10 lakh rupees or more in a financial year for acquiring shares is required to be reported through SFT by the company issuing the shares. However, this SFT mechanism does not include transactions which relates to unlisted shares, which are also a subject matter of capital gains tax. By including sales and purchase data of unlisted shares in the AIS, taxpayers are likely to resort to report such transactions more accurately and reducing the chances of tax evasion or tax avoidance. Now, intraday transactions also fall under speculative income, and hence their tax treatment varies. Therefore, it becomes really crucial to distinctly record these transactions within the AIS to ensure there is absolute precision and transparency. The data pertaining to outstanding demands and pending refunds is readily accessible within the tax department. Inclusion of such data in the AIS will really go a long way in achieving government's transparency and also gaining the trust of the taxpayer and the public. Also, in any unclaimed TDS in preceding years can be claimed by taxpayers in the current year's tax return. The details on unclaimed TDS of preceding years can be incorporated in AIS to avoid unjustified demands. You will note that the tax department has entered into MOU with MCA. The data available with the MCA can be leveraged and populated in the AIS. Similarly, items from the tax audit report can also be populated in AIS. So in case of mismatch, taxpayers can request to submit feedback on the AIS portal to avoid litigation and unwarranted demand. In recent years, there's also been an increasing trend of CPC making huge additions while processing corporate tax returns under Section 143(1). In many cases, basic checks are not followed, given that software is updated every year, and this results in creation of huge tax demands, resulting in unwarranted tax litigation. If the financial data can be directly populated in AIS, any inconsistency between data reported as per the tax audit report and the tax return filed can be highlighted, provided an opportunity to taxpayers to resolve differences before the processing of the tax return. Now, these are some of the measures which one can really be looked at for introducing additional data points to improve the functionality. With this, I hand it over to Rohinton for the next poll.
Thanks, Divya. I think that idea about the unlisted shares is the time for it has come because, as you know, compulsory demat is required for unlisted shares also. And once the data comes through the custodian, then the tax department should be able to easily pick up that data and report it in the AIS. So I think that's a very good move. This takes us to our third and final polling question. And as the question appears on your screen, I'll ask the audience to take a vote. The question is, do you believe that the AIS functionality would continue to be an important data source for your tax filings in the future? And you have three options: yes, to a great extent, yes, but not very much, or not really helpful. And while the audience submits their choices, Divya, a question for you. How effective is the existing online feedback mechanism within AIS for addressing discrepancies and providing input on tax data?
Winton, it's a very interesting question, and I'll back it up with certain recent instances that we have seen. So it is quite useful as it also makes the AIS a very dynamic tool, and it obviates the need to do a rectification or undertake an audit for apparent mismatches. So the example which I mentioned earlier was that we have seen recently the tax department issuing bulk notices to the employers where HRA exemption has been claimed by the employees by declaring certain amount of rent. Now the department has sought feedback from the landlord, and there were certain wherever certain discrepancies were noted, they have reached out to the concerned the employers and to the employees. Now this really helps in tracking wrong declaration evasion cases, and at the same time provide taxpayer an opportunity to really correct the bona fide mistakes which are there. So I think it's a very helpful mechanism which is there. Yeah. Back to you, Rohinton.
Thanks, Divya. And the results of our third polling question are out. And again, strong support, 85% plus support that AIS functionality would continue to be an important data source. Not a single person has said it's not helpful. So clearly, a significant benefit to taxpayers. With that, let's move on to our final slide for this webinar, where we like to summarize some of the things and also talk about global best practices. Now, information for the AIS is collated or can be collated by the tax department through a number of sources. This could include the Reserve Bank of India, the Ministry of Corporate Affairs, SEBI, the Central Board of Indirect Taxes and Customs, the various registrars and sub-registrars for property, for instance, valuers, and other specified financial transactions. As you may recall, SFT as a specific project was actually begun by the United States when they launched FATCA, where foreign ownership of bank accounts of US citizens became a reporting practice. And that practice spread under the CRS initiative of the OECD and spread across the world. India has set up their own SFT system under which certain transactions get reported. So while there are various global frameworks and architectures that can enhance data exchange, In our concept paper, we have actually explored in details as to how these platforms can actually improve the functionality of AIS. The first framework is actually connecting the different data systems, and this involves some development of technical architecture that allows seamless data exchange between businesses, tax administrators, and taxpayers. By implementing this framework, information gathered can further help and enhance the functionality of the AIS, and integration will lead to far more accurate data collection, facilitate compliance, and reduce redundant processes. So while Divya talked about a number of notices that come out because of inaccurate particulars in the AIS, by harmonizing the different data sets that are available, it can perhaps improve the experience for both the taxpayer and the tax collector. The next thing I'd like to touch upon is standard business reporting, or SBR. SBR allows businesses to submit information directly to government agencies via accounting software, and data received through the SBR can be integrated into the AIS for confirmation and for reconciliation, leading to far more efficient tax compliance and audit processes. So an example of this is in our tax audit report, you're required to comment upon a reconciliation between financial statements and the TDS return which has been to be filed, or a reconciliation between what GST you have paid versus what appears as sales in or purchases in the financial statements. So these sort of reconciliations actually are done outside of the framework of AIS, and if they can be incorporated into AIS, the amount of burden on taxpayers significantly comes down. Another architecture is what is referred to as the standard audit file for tax, or SAFT. Now, the SAFT's audit file has been introduced by the OECD, and many countries have already adopted it. So SAFT is basically an XML standard which is designed for electronic transmission of tax-related data from entities to either the tax authorities or to external auditors. And SAFT facilitates centralized information management, which will enable the AIS to extract relevant data for audit and compliance. In fact, several European countries such as Hungary, Lithuania, Norway, Portugal, Poland have already effectively used SAFT for VAT compliances or for other electronic accounting data. So moving on to the one taxpayer, one government view, this concept aims to unify compliance and audit processes through a consolidation of all the technology infrastructure for all government revenue applications into a common government hosted and managed secure cloud. This shared IT landscape can generate the AIS with a unified view, reducing duplication, improving efficiency in the compliance process. While all these points discussed above are incremental, one taxpayer, one government view requires a fundamental change in the technology architecture which is prevalent today. Now, the OECD with G20 countries, which also includes India, has developed the crypto asset reporting framework, which is called CARF for short, CARF. And it's a dedicated global tax transparency framework. Under CARF, there is an automatic exchange of information on crypto transactions done by people, irrespective of their residence around the world. And the data is then exchanged under CARF and can be incorporated into the AIS. This can also significantly enhance the utility of AIS by including information on crypto transactions. And today, the government has come out with fairly detailed rules as to how crypto transactions can be taxed. Now, the common reporting standard also requires financial institutions to identify information on customers who are tax residents outside of the country where they hold bank accounts. The data received by the Indian tax authorities through CRS can easily get populated into the AIS, subject to, of course, maintaining privacy and confidentiality, allowing for better tracking and verification of even cross-border transactions. The OECD has also developed what is called as the under the multilateral competent authority agreement, income derived from digital platforms. So it's called the DPI-MCAA. And although India is not yet a signatory, this agreement enables the retrieval of information on income generated by those offering accommodation, transport, or other services through digital platforms. Now, if that gets implemented, that data can also feature into the AIS. So, just to give you an example, if you had a property, say, in a hill station, which you rented out to users on a daily basis through a digital platform, that data will be reported by the digital platform to the government, and that can be exchanged both on the AIS as well as cross border. So, all these frameworks and architectures collectively offer a comprehensive approach to improving data exchange, compliance, and audit processes in a more streamlined manner by leveraging on these global best practices. Businesses and tax administrations can now work towards a more connected and transparent tax environment. So this was our last slide, and this is all that we had, and we bring to end our today's discussions. We now have some time to respond to some questions from our audience, and we have the question queue, which has, really come up over here. So let me go ahead and pick up a few questions for Divya and for Amit. So the first question, Divya, maybe I'll ask this for you. And the question is, does a taxpayer get immunity from not reporting on income and therefore not paying tax on if the same is not reflected in the AIS? So this is a very smart question. So Divya, be careful of answering this. Will the taxpayer, suppose if he's not aware that he had that income and that income is not shown in the AIS, then will he get immunity from not reporting such income?
No, there is no immunity, Rohinton, just because an entry is not there in AIS and or the taxpayer is not aware of that. And if there is some stream of income, there is no immunity which is there. The taxpayer can always resort to filing the updated return and make do the discrepancy or the omission which was there.
Sure. Thanks, Divya. So there is another question, and Amit, I'll direct this question perhaps to you. What are some of the features in AIS which could be used to tackle unaccounted money?
Rohinton, I mean, there could be multiple ways. If you look at the current income tax rules, for instance, it requires every person to quote PAN for specified transactions. Now, these transactions include transaction for sale purchase of unlisted shares, sale purchase of immovable property in excess of 10 lakhs, intraday transactions, and others. But if you look at it, there is no obligation in every case to report such transaction with the government authorities. And hence, such transactions can be reported and incorporated in the AIS to help tackle evasion of unaccounted money. If you look at it specifically for immovable property, data can be taken from multiple sources such as registrar or sub-registrar, seller allocating a property ID to a particular property, and so on and so forth. Similarly, for jewelry, each jewelry item held by the consumer or the jewelers can be linked with a unique identification number. Okay. Any sale or purchase transaction of jewelry without a unique identification number can potentially be declared as void. And further reporting obligations can also be imposed on jewelers at regular interval, coupled with kind of mandating stock audits could be another initiative to ensure systematic inspection and verification of jewelers' physical inventory with the information furnished by them to the government authorities. So all of this could be some of the measures that can help minimize cash transaction for jewelry-related transaction. And Rohinton, the recommendations that you spoke about regarding CARF and TRS will also bolster transparency regarding cross-border of illicit flows, for instance. We have covered these in more detail in the Deloitte policy paper that has been released earlier today.
Thanks very much for that, Amit. And it sounds as if you are asking Indians to report on what they really love, which is gold and jewelry, and report it in the AIS as well. So I think, yes, that's a very good point that you made.
Well, specifically with the rising prices of gold and jewelry, I think we should definitely move towards that.
Sure. So, Divya, we talked a lot about how taxpayers have benefited from the AIS, but can you give us some examples of how the information that is reported in AIS is being utilized by the tax authorities?
It's a very interesting question, Rohinton. And, as you are aware, the AIS contains, crucial financial information about individuals. Now, tax authorities have been really utilizing this information on a regular basis to see how it is impacted. So they use the AIS data to verify the income disclosed by the individuals and businesses in their tax returns. The discrepancies between any of these income reported or the tax returns can trigger audits or investigations. I just talked about, how the authorities had issued notices where there was a mismatch on the rent paid front between the employees, where the notices were sent out after seeing what records were there for by landlords. And similarly, for total investment made by taxpayers as appearing in AIS, the authorities in some cases have issued notices to the taxpayers in case the investment amount is more than the amount reported in the tax return. So there are some of those instances, and the HRA part we have seen only recently, where many notices have been sent to the landlords asking them to verify the information reported by the landlord vis-a-vis reported by the employees. Yeah.
So, Divya, I'll ask a connected question because there are many questions around this particular topic, and that pertains to the mistakes that are sometimes creeping into the AIS. So, some of the users have talked about mistakes for short term and long term capital gains working. Some of them are saying that the information provided itself is incorrect. And I know the tax authorities have incorporated a way to gather feedback. But in your practical knowledge, how has that feedback actually being used? I mean, do you suddenly get a notice because that feedback is disregarded, or is there some way in which the tax authority deals with the feedback that they receive through the AIS?
So what happens, Rohinton, is that there is a mechanism in the AIS portal where if any information, you receive any notice and you find there's a discrepancy, you can always go back and reply on the portal that this is where the discrepancy is, this is the amount which is which is the correct amount. And the authorities will in turn go and check in the systems, and they'll go back to the relevant institution to verify the reply that you have submitted. And in cases where there's actually an error, they will come back and they'll say this is rectified. But in case there is not, still there's a discrepancy, then they would issue a notice or ask you to come and verify. So it's an interactive process. It is not a one-way street. So that is what they are looking at. And as one recommendation that I had made earlier also was that, there should be a mechanism of discussing with or having some feedback with the taxpayer than just issuing notices. So if some kind of a mechanism can be put in place, that will really help in resolving some of these, queries which come up or the discrepancies which get noticed, and there's back and forth here.
Thanks very much, Divya, for that. Amit, I have one question for you and then a last question for Divya. So, Amit, the question for you is, we heard about the situation where if the data is not in AIS, then whether you get penalized for not reporting the data. But would there be penalties or consequences for non-compliance with AIS for taxpayers?
Yeah, Rohinton. So while there are no direct provisions on applicability of penalty or consequences for non-compliance with the AIS related data for the taxpayers, but in case there is any data mismatch with AIS, which could potentially lead to any non-reporting or under-reporting of income by way of an assessment proceeding. In that case, obviously, the taxpayer may be required to pay interest and penalty on the short payment of taxes, along with, of course, the balance taxes. Uh, so hence, the short answer is there is no direct penalty for non-compliance with AIS-related information, but it is important for taxpayers to ensure that their income reporting in the ITR matches with the information available in AIS to the extent possible. And if there is any information in the AIS they believe is incorrect or do not pertain to them, as Divya mentioned and as we discussed in the while going through the slides, the taxpayer do have an option to give that feedback within the AIS mechanism itself.
Thanks, Amit. Divya, this is the last question. Can the AIS be integrated with third-party accounting or financial management software that is used by taxpayers? So can it automatically get fed from taxpayer information?
Rohinton, internationally, there are standards which are designed for such electronic transmission of the tax-related data from entities to the national tax exchequer. In India, this is a next set of reforms which should be looked at, and one will really need to see how it gets evolved in the Indian context. But I think this should be definitely covered as part of the next set of reforms by linking this data. This is something which I highlighted in one of my slides also, that what are the additional data points that one should be looked at. So hopefully with the way technology is advancing and with the way the authorities are really looking at streamlining their systems, this could be something which could be next on the card. Yeah.
Sure, thanks. And that unfortunately is all that we have time for just now. Divya and Amit, thank you, and a special thanks to all of you who were able to join us from the audience. And if you, in fact, think of any other questions or comments later, please feel free to reach out either to me or to our speakers. We'd be more than happy to talk to you. At last, from all of us at Taxmann and Deloitte, thank you for your participation in the webinar today. Goodbye.
Thank you.